Goedemiddag allemaal. Heel fijn dat jullie zo talrijk zijn opgekomen ondanks het vreselijke weer. Dus since one of our guest speakers is not fluently in Dutch, we will hold this meeting in English. And so this lunch debate will be about wealth tax. It was in the news recently. One of the heirs of BAFS in Austria decided to let a group of people decide how part of her inheritance should be used for the common good. And more recently, more than 250 billionaires and millionaires are calling on the political elite meeting at the World Economic Forum in Davos to introduce wealth taxes to help pay for better public services around the world. What are we waiting for? Why don't we make this happen right now? Well, implementing such a tax seems not to be very easy. According to a study commissioned by the Federal Planning determining net worth is not a simple matter, and any wealth tax scheme would be difficult to make foolproof. The possibilities of evading or avoiding such a tax are considerable. So the Planning Office ordered such a study, and Thérèse Bastin from the Département d'économie appliquée de l'Université Libre de Bruxelles will introduce that kind of study. And then Lorenzo Buti from the Institute of Philosophy will give his comment. You have the floor.
So thank you everyone for being here today. I'm very glad to come to present this study from Dulbea, and it was for the account of the Federal Planning Bureau in the context of the electoral costing exercise. Sorry, I haven't. Yes. So why did they ask for this study? So in 2019, there were already some political parties that asked for the measurement of such a tax on the millionaire. But the Federal Planning Bureau did not have reliable data nor an agreed method to try to investigate those measures. So in view of those elections, they firstly asked the ELB to make this study, and also they are this time estimating the potential cost and revenues of such tax. So the goal of our study was first to define the household net wealth, but mostly to identify what are the data sources available to quantify net wealth and what are the different problems associated with such estimation. And then we are also making a literature review to define what are the main effects and risks that such tax can entail. So the context of this task, as you just said, there is a renewed interest in such tax. It started with Piketty's ideas in 2014 to make a global net wealth tax. And then a lot of policymakers and economists started to think about it as a solution to two main issues nowadays. The first one being the increase of wealth concentration. In Belgium, the last numbers from the NBB released last week showed that the 10% wealthiest household possessed 55% of total net wealth. And the second issue it could solve is the deterioration of public finance. So it could be a solution to raise more funds that we crucially need due to all the crisis, pandemic, energy crisis, and so on. This new interest has been reflected in political proposals. So first in the US with Elizabeth Warren and Senator Bernie Sanders, who put it in their political proposal to tax the millionaires, but also, as I said, in Belgium, where different political parties also propose such tax. But this new trend could be seen as a big surprise because the overall trend in the OECD countries is actually to abolish such tax. Indeed, in 1990, there was 12 OECD countries that still implemented it, while nowadays only 3 countries still have it, namely Spain, Norway, and Switzerland. So first, let me define what is a tax on net wealth. So the household net wealth is made of all his assets, whether it is real assets, such as the main residence, vehicles, or financial assets, such as deposits, if you have shares, bond, and so on. And then you deduce the amount of your liabilities, whether mortgage loans or credit debt. So first, we wanted to know how we could estimate it from an aggregate point of view. And then we will see how to quantify it from an individual point of view. So the best case scenario is that a country actually has administrative or wealth tax data. It is the most reliable data because the government and with the financial intermediaries are directly collecting the data on wealth themselves. So they do have a wealth tax register. However, it is reliable but scarce because not a lot of countries implemented or still implement a net wealth tax. Then we have 4 different types of methods to try to fill this gap of those reliable data. So the first estimation method is called the estate multiplier. So it relies on the data from the inheritance and gift taxes. So you have the value of your wealth for the death, and then you multiply it by the inverse of mortality rate to try to convert this wealth at the end of your life into the wealth of the living. It is the oldest method, and it has been used even very recently for Belgium, where they used the data for the 20th century. But other methods are more recently used. For instance, the income capitalization method, which use income tax return and stems from the income and use rates of return to recover the value of the assets. And as you may know, the main sources we have in Belgium is now the household survey. So we have the household finance and consumption survey, which is an ECB survey, and in Belgium implemented by the NBB. In the US, they also have this kind of survey, but a very well-known drawback of such sources is that it actually underestimates the wealth of the wealthiest at the top. And for 2 reasons, because the richest either tend to not answer to the survey, or when they do, they actually underreport the value of their assets. So it is one big issue for the surveys. So to try to solve each of those drawbacks, now what is commonly used in the literature is the mixed method. So for example, using the income capitalization method with a survey. So it has been used in the World Inequality Database, for example, by Zuckman and economist Piketty very recently. Or you can use the survey and you try to estimate the top of the distribution using list of rich. So in Belgium, we do also have a list of the rich, which gather around 600 wealthiest individuals and families in Belgium. So here is a table that summarizes the main estimate we have for the net wealth distribution in Belgium. So what we see is that the 2 first studies in the 80s and 90s already tried to estimate this distribution, but they used income capitalization method. So the first row represents the wealth concentration in the top 1%. What we see is that if we use the raw data of the survey, the HFCS, this concentration is at 16%. But the more recent study tried to correct for the bias at the top of the distribution using new sources, and now we see that the concentration is actually higher than those 60%. Apostel and O'Neill, for example, in 2022, estimated this concentration for the 1% wealthiest household was actually closer to 24%. So that was for the macro or aggregate level. But now we also wanted to ask ourselves what were the data available to reconstruct the net wealth and to know what are each assets that were available. So what we found is that the main difficulty is located at the financial assets. Some assets are actually known by the NBB through the central point of contact. So it was created in 2010, and the financial intermediaries are sending information at the macro level to the NBB, but not for each financial assets. There are information on deposits, for example. However, this very crucial database is not available for every FPS finance agents, so they can only access it if they suspect any fraud or for the need of tax recovery. So we do believe there is a need for a change in legislation to broaden the access to such qualitative database. Also, another issue is that some assets are still unknown to any institution. For example, the unlisted private shares. So if you have a share at the library, no one actually knows it and can quantify it. And it is an issue because the wealthiest households tend to have a lot of this kind of assets. Also, valuable assets are not fully measurable, but we can still try to recover its value if we look at insurance companies, but it's not possible to actually know every jewelry and valuables an household has. And about the most accessible data are the one on real property but the issue is that it is very outdated, and so it's not representative of the real value of property assets. So now that we understood more what was the net wealth, what is a net wealth tax? So it is a kind of tax on wealth. So wealth can be taxed to two ways. Either you tax the capital income or the property taxes. And to tax the property, either it is on the transfer, such as inheritance and gift taxes, or you tax the stock and the detention. So a net wealth tax is the same as the tax on securities accounts, for example, we have in Belgium. It's the same kind of tax on wealth, or the real estate wealth tax they now have in France since 2018. At the international level, so now, as I said, it is still implemented in 3 countries, Spain, Norway, and Switzerland, and it always represented a very small share of the revenue as a percentage of the GDP. This kind of tax has a very diversified design, so the tax threshold can be set and it will define the redistributive effect it has. Also, some countries rather implement and use progressive tax rates, such as it was the case in France, for instance, or a linear tax rate, meaning you just have one threshold above which you're taxed. And it could also be at a regional or a national level. Regional, it is still the case in Switzerland and in Spain that it is at the regional level. One big issue or very important point is the taxable base. Most of the countries still exempted some assets, which were the business assets, so that they do not try to undermine the entrepreneurship of the country. And they also tend to exempt pension savings, also to try to incentives for savings. Main residence most of the time had a preferential rate. It was also the case in the Belgian proposition. If you want to have the broader possible tax base, it is better to try to avoid opportunities for tax evasion and avoidance. So this graph here represents the breakdown of property taxes as a share of GDP by country. So it gathers all the wealth taxes except for taxes on capital income. I don't know if everyone really sees well. So the tax we are interested about here is in purple. As we can see, it is not very present. And one country that we can notice easily is actually Switzerland. And we see that the net wealth tax represents a high part of the tax revenues. What it means here is that Switzerland, which is often cited as a successful net wealth tax, it is actually the case because this tax is a substitute of other taxes they have on wealth. So for instance, now their inheritance tax is at has been regionalized, and most of the regions are starting to abolish it. We also can see that Belgium is at the top 4 country taxing wealth, and it is mostly due to immovable property and so taxes on financial and capital transactions. In Belgium, now, so what is also very important is that we also have the highest inheritance tax revenues in the OECD countries. So it represents 0.7% compared to 0.1% for the average OECD's revenues. However, we tend to have low revenues from taxes on income. If we look at a statistic that is commonly used in the press, it is the statistic given by the European Commission, which says that the implicit tax rate on capital leads us to have the second highest rate. However, this statistic commonly used in the press is on capital and not wealth. Actually, the difference is that the statistics also take into account corporate taxes. And our implicit tax rate on wealth increased between 2010 and 2017. This table here showed the different wealth taxes in Belgium, and if we look at other taxes on the use or ownership of property, this is where a net wealth tax would also be located, so at the same title as a tax on securities account or a tax on long-term savings. So what about the different effects and risk of such tax? What I was very surprised about is that there is no consensus of how to determine and to define the time horizon of the effect. So we don't know if the short, medium term is about 5 years and the effect of the long term are 8 or 20 years. However, they do agree on one statement, is that in the short term and in the medium term, we are most likely to see tax avoidance and evasion, while on the longer term, it will be rather a real behavior answer, such as changes in savings, labor supply, migration, or adjustment of the entrepreneurship. However, if in the short and medium term, the possibilities for avoidance and evasion are limited, it could lead the household to also have some real behavior answer. So here is the literature that we used. There are some new papers that were released in December, but what we can see mostly is that most of the papers are European, except for the paper in Colombia, and that this literature is very limited, as only few countries implemented or implement such tax. So on the short and medium term, one of the effects we see is fiscal evasion. It means that the household can have the incentive to modify its behavior to benefit from more favorable or zero tax rates. So it could concretely mean that it would underdeclare his net wealth or transfer his wealth abroad. So if, as in the case of France, the wealth tax is self-declared, it could give incentive to evade the tax. Some practical examples of such behavior was in Sweden from a paper from David Sames, who showed, the Swedish tax was normally reported by third parties, so it was directly reported by financial intermediaries. But only one type of good or few goods were directly declared by the household, namely the car. And what he sees is that only for this type of asset, 75 to 25% of the taxpayer were underreporting these assets. Also in Switzerland, researchers have found very high elasticity, a very high response of the wealth tax to the tax. And 50% of this elasticity was caused by the underdeclaration of financial assets. Another behavior that might also happen is fiscal avoidance. So here is the fact that that exemption and preferential rate could lead the incentive to switch for assets that are less or not taxed at all. So, for example, in Spain, a recent study showed that there was an increase in the share of exempted assets following a 1% increase in the average tax rate. Now, on the longer term, there are more real behaviors changes. Also, one of the main arguments we often hear in the press against a net wealth tax is that it would decrease savings. But what the empirical literature shows us is that there is no consensus of whether the substitution or the income effect will actually prevail. Even though the number of studies are very limited, the most recent one in Norway showed that actually it's the income effect that would prevail over the substitution effect, which would mean that actually savings are increasing. Another very commonly heard argument is about migration. If you tax the rich, they will actually leave the country. From the literature point of view, it is very hard to assess such causality, but most of the time they do not find any significant evidence for such migration. However, for the countries that implement it at a regional level, such as Switzerland and Spain, we do find significant migration among the countries because it is less costly to travel and to switch between cantons or regions. There is also literature on labor supply and entrepreneurship. It is actually very limited, and there are, as for the savings, no consensus on whether the impact will be positive or negative. Very shortly also about the risk that linked to the implementation. It could entail very high administrative costs because you have to collect every value of the assets and then control for it each year and update the tax base. Also, one of the big arguments is that it would lead to double or triple taxation. Since you tax the wealth, this wealth could either already be taxed through the salary or the income, the capital income, or if your wealth comes from inherited assets. But it is an argument that we could hear for a lot of taxes. However, here we could limit such arguments because if the tax threshold is set further into the distribution, it could, since the wealthiest are made of income capital tax, which is less tax than wealth, it could actually limit this argument. Also, in the case of Belgium, there is the problem of fragmentation of Belgian wealth tax. Because, as for example, the regional property tax is regional, and if we want to put a net wealth tax at the federal level, there will have some discussions on how it could concretely be implemented. So to conclude, there is this big debate between equity on one side and efficiency on the others, because this tax has a redistributive potential, while at the same time there are proof or behavioral consequences and some risks. As we've seen, the quantitative definition of net wealth is very hard in practice. In Belgium, at the individual level, since we do not have a wealth registers, we need to have access to the best data we have, and we need to enlarge the access to the central point of contact. Also, from the international experience, what we see is the dilemma about where to set the tax threshold. If we want to have a broader taxable base, which is good because it could reduce the opportunities for tax evasion and avoidance, the risk is that it could also affect the middle class. However, if we want to target the wealthiest and put the threshold higher. The problem is that most of the richest wealth is made of listed shares, which is harder to value, and so it could lead to higher avoidance and to limit the revenues from such tax. Thank you for your attention. Should I stay here?
Hi everybody, my name is Lorenzo. I'm a researcher in political philosophy here at Leuven. So I'm not a professional economist, but I did do a study in economics quite a few years ago. My dissertation was actually on economic inequality, so for me it's also been nice to go back to some of these discussions. Philosophers sometimes I find come over as spoiled children, in the sense that social scientists, like economists, do the dirty work. They go in the data and they look at, all the policy effects, and then we just take it and we take a step back and we start thinking up here. On the other hand, it's also probably good to be able to take a step back and kind of broaden these discussions to see where we come from and where we want to go. So micro, macro in some kind of fruitful combination, let's say. I wanted to make two comments. One was more of a question, and the second one was maybe a little bit more of a longer comment. My question was on the national scale of the wealth tax. So you start your presentation also saying that the idea of a wealth tax became popular with Thomas Piketty, who wrote it in his book, Capital in the 21st Century. If you go to that book, Piketty advocates for a global wealth tax as an ideal form, and he's very explicit in saying that at the national level, states do not have sufficient, let's say, power to impose high enough tax rates on wealth, because there is, a lot of capital mobility. The moment you start to implement like really higher taxes on wealth, that capital will move to other countries. So I just, maybe like this could be something for discussion later, how you see, this wealth tax at an international level, perhaps a European level, versus at a national level. What differences could it make? So that's first question. The second one was maybe more of a longer comment, where I wanted to take a step back and just ask the question of, we have these systems of redistribution, of progressive taxation, just asking the question, where does it come from? Why do we have it? Well, I think from a philosophical perspective, we have these systems of redistribution because we live in a democratic society where symbolically or implicitly we have all signed or agreed to some type of democratic social contract, where we agree to live together in a society where everybody has a minimum of, let's say, social dignity. We have everybody who lives in a democratic society is able to actively partake in democratic decision-making. Everybody has a minimum of economic or social security. Everyone has access to certain basic goods and services, pensions, health, good education, but also hobbies like music, sports activities, all these things. I think that our democratic model is based on this type of social contract, and that progressive taxation works to finance and to secure this idea that we live together in a society where we can all kind of participate actively and with a level of dignity. Now, what has happened over the last few decades, at least argued by some philosophers, sociologists, is that that model of that social contract has come under increasing strain, both at the top and at the bottom. At the bottom, you see an increase in poverty. I just this morning went to a Flemish government website which said that 10% of children in Flanders, so a wealthy region, grow up in families that have difficulties making ends meet. 10%. This number has been increasing. On the other hand, there's also a strain of the social contract at the top, where you see a wealth concentration, massive tax evasions. Every few years you have a scandal coming out about tax evasion. Increased capital mobility, also making it more difficult for states to impose certain taxes, as someone like Piketty argues. So I think there's a good case to be made that this social model in which progressive taxation functioned has come under increasing strain. I think we can add to that also, new challenges of the 21st century, the challenge of climate change and the ecological transition, which will most likely require massive state interventions, massive state investments, and that money has to come from somewhere, right? So I think from this very broad perspective, a strain on our social contract model and these new challenges, for 21st century societies, I think there's a good case to be made for rethinking and updating our democratic social contract. And that's where a wealth tax or increased taxes on wealth can come in, because they put the burden of taxation, of financing these things, more on the broadest shoulders. I say this, and I want to finish up with this, because it's I think important to place these proposals in broader, in this kind of broader analysis, where if you put it in the context of this updated social contract, you can see it as a part of, broader changes that can or should be made. And I'm going to finish on these 2 points. On the one hand, perhaps shifting the tax base more from, taxes on income or labor towards taxes on capital to finance increased investments. But on the other hand, also not just presenting it as a tax, but also to use this revenue to invest in public goods and in social welfare policies with, I think, a double aim. On the one hand, increasing or reducing poverty, and on the other hand, mitigating the effects of climate change. So really seeing a tax in the context of these kind of new challenges that we're facing as a society. I'll leave it at this very, very broad macro point. Thanks.
So perhaps before we turn to questions, Thérèse can perhaps react on the comment.
Sure. I mostly would like to answer to your second point, because I really agree that the social contract is shrinking and we need to find ways to raise more funds, and thus the whole debate of a net wealth tax. My question is, my worry is more, is the net wealth tax the best, optimal and efficient way to raise those funds? I think we really need public funds in the short term. And in Belgium, perhaps the most efficient way to increase those funds is maybe not a net wealth tax in the coming 5 years. Because if we see, in Belgium, we do not even tax the added value on shares, for example. So it could be actually a more concrete way to now raise more funds to shrink those inequalities, and in terms of fiscal justice, it would also make sense, and perhaps pave the way now to construct this wealth register so that it would be feasible in the medium term. So we all know that we need those funding, and this debate is really crucial, especially in Belgium with the lack of data transparency and access. So my question, and it's a worry and a question I'm always reflecting on, is whether a net wealth tax in the short term is this big solution to everything we actually want.
Thank you very much. So the floor is open. Questions? Yeah. Short questions, no explanations.
I will try.
Okay. Yeah.
I have two
Please.
questions. I have two questions. First, I would like to say that tax is necessary on all incomes, on all kinds of revenues, and there is a lot of work to do to reach that. On the other hand, net wealth tax or capital on itself, that's another question. My first question is, there were 12 countries, as I understood, who applied this in the years before. Why, if this was efficient and practical and easy, why did they stop? Second question, one of the reasons I read is budgetary problems in many countries, but especially in Belgium. And we are already the most, or almost the most taxes country in Europe, not to say in the world. Secondly, the cost of government, and I do not mean social security, health care, and so on, that's very good. But the administration cost of the Belgian government, that is enormous, is the world champion, the many governments, the cabinets, the ministers, and so on. Why, before trying to find, again, other taxes on already one of the most taxes in the world, why not first look at the possibilities to reduce the costs? I do not, one talks much about that, but I do not see real. But new taxes, this is okay. And the very last question, I heard Ms. Bastin say, we have to change the legislation. Who is we?
Thank you very much. So, if you could try these questions.
So the first one, why 12 countries and now only 3? Well, actually, the literature on the effect and risk, answers most of this question. So actually, they see first that the revenue it generates was low. So from a political point of view, it became harder and harder to legitimate such tax. The revenues were low. Everyone thought that the wealthiest were migrating, and so it was harder to legitimate. And it was more about fears than actual studies, as I've showed. So this is the biggest reason. Second of all, about your second question on administrative costs, it is true that this tax would even increase, potentially in a significant manner, the administrative cost in Belgium. There is a paper by Berger in 2021 that actually tries to estimate the cost from imposing a net wealth tax. And those costs shows, and his study shows that those costs will be significant. So indeed, it could be a first way to answer the need for public finance by looking at how to manage efficiently the existing taxes we have and to try to shrink those administrative costs.
That was not my question.
Maybe.
The question is, can we first arrange the situation in such a way that it becomes cheaper to have a government, or?
The huge cost of the government, enormous. Why not first look at this aspect? It's not the cost,
Taxes. Okay, indeed. And about the change of legislation, after this study we were invited also to talk to some political parties, and this is to those that we actually address these main concerns. Some political parties.
There is an aspect of double taxation which you did not cover. You tax both the tree and the fruit it produces. For instance, for a stock that is held in a securities account, it is taxed at 1.5 per thousand. That stock produces fruits, dividends, say at about 2% of its value. And the dividends again are taxed at 30%. So that's another 6 per thousand tax implicitly on the tree.
I believe what you are saying refers to this problem of double or triple taxation, and which is indeed one of the main concern about the net worth tax, because it will at the end tax something that has either been inherited or accumulated, and which also will be taxed in another form.
So it's each year again that you tax doubly, and you did not cover that. So you tax the position of the tree, and also you tax the fruit that the tree generates each year.
That is true.
I think you referred to it briefly, but wealth sometimes can be quantified easily, like money. Okay, that's clear what a dollar is worth, what a euro is worth. But there are some things that wealthy people possess that are very difficult to assess, like art. How much is a painting worth? That's difficult to estimate. There have been several countries where taxes were imposed, for instance, on your house. Then if property prices went up, California is a perfect example, people couldn't afford anymore the taxes on their own house, even though they had purchased it, their house had not changed. Piketty, for instance, calculates that the Japanese in the 60s became very wealthy in Tokyo because the property prices went through the roof, but they lived in exactly the same house. So, I mean, these people have no additional benefit from the fact that the price of their house went up until they sell it, of course. Then what do you do when the price comes down? Do we get money back from the government? No, but that would be a fair proposition, that it works both ways. If you're taxing an increase in value, you have to give money back when the asset depreciates, and I'm not sure that any government is willing to take that gambit.
Yeah.
So you have no response to
It is true that I've never heard someone raising this issue before, or try even to think about a solution that could, for those kind of practical problems. Yeah.
Thank you for your presentation. I have a question, but I need to just quickly explain it. I love the fact that it's, and I hope you agree, that it's maybe a first step in this discussion on wealth taxation. It's not the final word, it's just the first step, and I hope there will be a lot more scientific studies and remarks and discussion. And in that sense, I would like to ask the question, like it's a first step, and then what could be the following steps, right? And one of the things I found in the study is that the emphasis is on what could be the complexities of Belgium, what could be the costs of this tax, and so on. But there is not so much the emphasis on what could be the potential benefits. And for this, I will refer to, like there are several studies, one of them you cite, Apostel and O'Neill, that's claim that, okay, we do this wealth tax, and the effect of that tax is not just, as in your study, behavioral, but also for the climate, for example. There is also a study in Warwick, the University of Warwick did, if we do a wealth tax, it could help decarbonize our economy. And I think that this, my question is, why is this lacking in the study? And is this not an interesting second step to pursue?
It is true that we didn't cover the potential impact on the environment, and that now other studies, such as Capeller or even studies for a European net wealth tax are also digging into what are the impacts on the environment. And it is a whole literature very interesting that we could dig. It is true that this study, the main point was to be a start of a discussion, because I was actually pretty surprised that except for Apostel, that is the main contribution in this literature, I do not see a lot of debates coming from a scientific point of view. And so here I hope our hope is more to raise the awareness of the lack of data and the lack of transparency, and to hope that it will raise reflection and maybe other debates, so that maybe we could finally have these wealth registers, or at least to estimate on a macro level the different value of assets. So yeah, thank you.
I have two questions, one economic, one philosophical. The first builds on the comment just made. If the prices of the houses go up, you don't become any wealthier. Is there any attempt or effort made to correct for inflation in all those calculation methods for calculating wealth? That's the first question. The second one is, if you hear the comments, and it's a general remark, you often see that there's a lot of reticence against the idea of taxing wealth. But we're talking about taxing excess, basically, a lot of wealth, excess wealth. So it's a philosophical question. Where would that reticence come from? The idea of taxing excess wealth. If you see America, even the poor hate being taxed. So
So I can start by answering about the correction for inflation. It's actually something that I've never heard of, so I do not think that any studies from the literature review ever tried to correct for the inflation.
It is easy to do to take the tax basis, for instance, inflation base of 1980s, 1990s, and then see, okay, you just correct for whatever
inflation. Could be an idea indeed.
Yeah, just a short response on your second question. I mean, who likes paying taxes, right? You get your income, you see how much you have to pay in terms of taxes. It feels like it's money that you have to give away. To make certain policies acceptable or popular, you need a certain, a political discourse. In the end, it's about how do you frame a certain proposal. Indeed, if you think about a tax that would only target the top maybe 2% of the population, imagine. It's all about politics, whether you are able to see it or sell it to the broader public as a policy that will not affect you, or whether it is a policy that is kind of intrinsically unpopular. I'm thinking of the policy proposals about taxing inheritance. You also have these proposals about taxing more heavily very high inheritances. Well, usually liberal or conservative parties are pretty good in saying that this is a death tax. If you say this is a death tax, that resonates with people, right? You're able to sell something and frame something in a certain way. Well, how you frame something, which connections you emphasize and which connections you do not emphasize, will determine how likely it is that a certain policy gains social acceptance. So I think if you're in favor of something like a wealth tax in view of decreasing inequalities, well, you will put the emphasis on exactly the fact that this will tax excess wealth. If actually you do not think that economic inequality is such a big problem, well, then you will emphasize more the connections, the fact that everybody has certain rights to dispose of their money in this or that way. For me, that's a question of politics, really, and just about how you sell your story towards a broader public.
Sorry, may I speak Dutch? vermogensbelasting lijkt mij het ontkennen van het ware probleem waarin ons land zich bevindt. De ware toestand van de publieke financiën is dat wij sinds 20, 30 jaar meer als staat meer uitgeven dan politieke moed om de inkomsten te innen. Wij hebben volgende jaren een rentelast opgebouwd van 14 miljard per jaar. Rentelast. We komen uit een demografisch schitterende periode en we gaan naar een demografisch moeilijke periode. We komen uit een besloten economische realiteit naar een geglobaliseerde realiteit. Ik denk dat het ware probleem is niet een verhoging van belasten in welke vorm ook, maar het verminderen van uitgaven op een niveau dat sociopolitiek door een bevolking aanvaard wordt. En die grens ligt mijns inziens op basis van cijfers die je kunt controleren, rond de 50%, wat een maximum is. Dus het enige echte antwoord op de problematiek van financiële overheidsfinanciën is het naar beneden halen van die overheidsfinanciën door de uitgaven naar beneden te halen, want anders zal het niet lukken. En daarvoor is politiek moed nodig, waarvan ik twijfel of hij de eerste 10 jaar zal gedragen worden. En nadien zal het catastrofaal zijn, inzonderheid naar de armoedebestrijding.
That it's not the best solution to raise more public funds, but I'm not sure.
Yeah, the best solution is to reduce expenses.
Yeah, expensive. Okay.
Can you give a short response to this? Or?
I think I got the main point is that it's not the best efficient way to raise public funds, but you told me the solution was to decrease its expenses.
Yeah.
Okay.
So it's a lack of trust in the government, the way they spend money. Okay? Yeah, you can.
Yeah, I'll just I'll give a broad comment. I think in general, you know, we have had over the last 2 weeks very big, you know, how do you say this? Not protests, but dissatisfaction with the new plans of our public transport, right? Why did we reduce the amount of available buses, especially in regional areas? It is because our public transport wants to be more efficient, right? Why are universities complaining about a lack of income? It is because the income that the university gets from the government has also steadily been decreasing. When you say that you have to cut expenditures, it's important to frame it in terms of efficiency. I think everybody wants an efficient government. I don't think anybody wants governments that wastes money, puts its money in antisocial or wasteful activities. On the other hand, when we see where these cuts in funding happen, we also feel it. We also feel it in, for example, a public transport system that is becoming, first of all, way more expensive and then also less accessible. So seeing where this money goes, looking at that is a very delicate exercise, and I always worry when we say we have to cut expenses that we will hit things that we do not want to hit. For example, our public transport system.
Okay, so there was a question.
A very interesting discussion, and especially by including the philosophical element. I want to make 2 points. First, there is, when we say we want to reduce the cost of the government and thereby generate money, true, but there is always the discussion, the taxation between wealth and earnings from labor. So even within a context of not increasing the expenditure by the government or even generating money by becoming more efficient, there is a philosophical question to ask: how much taxation do we want to shift from work, which is very efficient, effective to raise towards wealth, because for true, the point was made, all income should be taxed. The point you made about sometimes we need to think about what can we do short term, and capital gains is relatively easy to tax, and we should develop a road to get there rather than because, sorry to say, your study is nice and the conclusions are there, but in the end, it's the philosophy, the political position of the parties after the next election, which is going to drive what will happen. And unfortunately, it may be very inefficient and very costly, but it'll be a token, that's my opinion. So we always have to go back to the foundation. What kind of a society do we want? That drives where do we want to get the money from? How do we balance between wealth or income from wealth and income from labor?
So, in the discussion, there was no reference to the veil of ignorance of rules, so that taxation could be justified by solidarity, the fact that we have talent that give rise to income and should be taxed because we were lucky to have the talent, or we were lucky in building up wealth. So luck should be taxed, and this is the main reason, I think, why we should have taxation, and also wealth taxation, because we could be lucky in the history, and that our wealth results in more wealth. Yeah? So that's my question. Why not refer to roles?
Refer to roles. I think one of the, I mean, this is just, I guess, repeating what you said, but one of the principal arguments for something like a wealth taxation is the fact that it's something that you have. If you look at the amount of inequality in terms of wealth, it's very difficult to see that as a product of your own hard work, and in that sense, it's a more justified basis to tax on. But these are indeed like kind of moral normative questions that are at play in this debate. Yeah.
If I may also try to answer this question. So Rawls' approach is still a little bit on the level of individuals, and the principle are an abstract, logical concept. But most of all, when people are forming a kind of society, there seems to be a kind of solidarity among them, a kind of identification with we, and a kind of notion that we as a society would make it possible that there are all these kinds of things we can do for each other. So solidarity is then more a kind of preparedness psychologically to identify ourselves with the government as the representative of the we. If the deep identification is glowing and interesting and everyone is enthusiastic, then of course paying taxes will not be seen as very potent, because it's not the point of the individual, it's the idea of the we. But as we have witnessed here, there is not much trust in the we, isn't it? So the government is seen as paying too much money, you can't trust them, they arrange things too complicated, it's a mess, so we need to reduce it, and so on. So I think that if we want to have that social contract, that it must be a lively engagement of the community, not an abstract principle. And I think in Rawls' approach, it's a little bit too abstract. It's a little bit of a philosophical concept.
But I'm not a philosopher.
Well, I am a philosopher.
I'm asking why you didn't make reference to Rawls or to insurance, so utilitarians.
But these kinds of arguments are quite abstract. Indeed, they can logically be true. But the problem seems to be, if we want to form a society that tries to make good proposals for the common good, that we need to have that kind of psychological identification, that kind of enthusiasm. And as long as
we don't have that kind of solidarity, that abstract principle will be a little bit strange and not appealing enough. So we need to have indeed roles, but we need to have also that kind of psychological thing. And less thinking that we are just individuals and there is no society like Thatcher was claiming. So the last question was then.
Have you ever thought or tried to estimate the benefits of the super rich? If you look at the
Arts, if you look at architecture, if the super rich would not have been there in the past centuries, we would have empty museums, we would have no huge buildings. Now look at the top 10 richest people in the world. At least 3 of them are major philanthropists, and they are doing things that are beneficial to society, which governments obviously are not doing. So when you remove these people from society, they're also starting new companies and so on. Thanks to the wealth they have, they can do that. So is that ever taken into account when you make these calculations?
The question is how bad would it, what is the extent to which it would impact their philanthropic activities? Because no, that's not something we actually can measure right now, but with the method I have in mind, but perhaps there would be a solution in the future to try to measure how those, if this kind of tax will shrink their philanthropic activities.
Okay, thank you. I think we have to close the session now. Thank you for the introduction. It was very, very interesting, lively discussions. I hope to see you